What's up, everyone? It's Scotty with Money Investing. So welcome on board for another Market Open live stream here. Just let me know in the live chat if you guys can see me and hear me. Just want to make sure that the audio and the video is working well. The NASDAQ right now, it is pretty much up a little bit over 21 basis points. We were much higher than we saw a big drop here. And right now we're starting to kind of recover a little bit. We got the SPY down about a little bit from pre-market highs. We are still down close to 0.5%, but green close to over 7 basis points right now. And the Dow Jones is still red, down about 22 basis points right now. So hope you guys are having a nice day and a nice Friday. It is the long weekend, so Monday the markets are going to be closed. So once again, good morning, happy Friday, welcome on board. Very, very happy to have you guys. The volatility is green. However, it is down on the day, so we're down about 1%, but a green candle. So we are definitely seeing a little bit of a push back higher, back up to 27, 28 levels. Oil prices, however, have been selling off, quite a bit. So we are down a little bit over 4% this week. And right now on the day, we are down close to 2%, back under $92 per barrel, so slightly above $91 per barrel right now. Ethereum finding a support roughly in the $2,800 range, and Bitcoin is just at over 40,400 at the moment. Yesterday we had a pretty brutal sell-off for the markets. Needless to say, the Nasdaq was down close to 3%, so very, very significant selling pressure here. So consistent weakness here from the Nasdaq, just absolutely getting destroyed. And then the S&P also was down close to over 2%, with the Dow Jones also dropping over 1.7%, and then of course right now down over 22 basis points pre-market. All right, so let's take a quick look on the earnings here. So obviously the earnings week is done. We had DraftKings report their numbers before the markets open, and they are hurting right now. So DraftKings is down, I think, 14 or 15% last time I checked. So right now they're down a little bit over 16%, trading down to $18.45. So that pretty much wraps up our earnings a week, right? So a lot of stocks, a lot of companies. I mean, PALTR 15% pullback, Shopify got destroyed, Nvidia down 7% after earnings. Upstart was the only stock that I think did really well, up over 15%, although it sold off yesterday. Matterport got destroyed. DoorDash actually did well. And I think Airbnb also pushed higher on earnings. I'm not sure. Let's take a quick look. Yes, I think Airbnb also did somewhat okay on earnings here. But yeah, I mean, we got a lot of some of the bigger companies, Shopify, Nvidia. Roku right now is also selling off, so we didn't talk about that. But ROKU down 27% right now. I mean, this is just absolutely incredible. I mean, the amount of the selling pressure that we've seen on earnings this earnings season has been crazy. And then of course DraftKings also selling off right now, down 16%. This right here again is going to be the economic calendar. So next week we've got the consumer confidence coming out and the GDP report, along with the PCE numbers. That's your personal consumption expenditure. So it's only three things that we're going to be paying close attention to. That's going to come out on Tuesday, Thursday, and then the Friday next week. And then that pretty much wraps up our month of February. So Bank of America chief investment strategist sees a recession risk rising, is bearish on stocks. So rising interest rates are increasing risks of a recession that could hit stocks hard, according to Bank of America top strategist. So it's not like something that is new information. We've been talking about a potential recession scare for a long time, as we've seen the spreads between the yield curves also come down. And we're also seeing the yield curves in general kind of flat. The only thing is, if they invert, that's also going to signal a potential recession here. And then in his weekly roundup of where money's flowing in the market, Bank of America chief investment strategist Michael said the Federal Reserve's inflation fighting efforts will have consequences. And over the next 6 months, HeartNet sees a scenario where the rates shock morphs into recession shock, and he anticipates that recession risks are rising. And that means we remain bearish. Tech, stocks, credit, long volatility, cash, and defensive assets. Very, very interesting. And Bank of America has 4,600 price target this year for the S&P 500, which is actually a 5% gain from Thursday's close, but is below where the index started in 2022. So 4,600 for the S&P 500 is what the target is from Bank of America. That is going to be a little bit of an increase of 5.5%, almost 5%, but it's still going to be down year to date. So S&P 500 will possibly have a flat to down year in 2022, according to Bank of America. Now, investors are concerned about Russia-Ukraine crisis piling into bonds. So we saw the 10-year Treasury yields dip below 2%. So right now we're trading at 1.94, 1.93 right now is where we are, 1.937. And that is as a result of bond prices going higher, right? So you got a nice pop in the TLT. That's your bond prices ETF. We got a nice push higher, up over 74 basis points, and then 67 basis points pre-market, pushing higher even further. So we are seeing a little bit of a move towards defensive stocks and towards flight to quality. In other words, safety of bonds is what we saw on Thursday. And then the Friday, we're starting to see the TLT ETF move higher as well as the bond yields are pulling back. So obviously this is a very risk averse environment in the markets, people moving away from stocks and riskier assets such as cryptocurrencies over to stocks and defensive names such as Walmart and some of the other companies, Home Depot, Lowe's, some of those companies that are doing really well here year to date. So Roku shares sank more than 25% in Friday's pre-market, the morning after a video streaming device maker saw quarterly revenue fall short of forecasts. It also issued weaker than expected outlook, citing higher component prices and supply chain disruptions, and the stock was already down 68% in the past 12 months, and Roku got an early pandemic boost when people were stuck at home. You know what's going to be really interesting today? What's really going to be interesting today is if Cathie Wood ends up buying or selling Roku. I'm really, really interested and curious about her decision today because Roku, I think, is in the top 3 of our top holdings. I think it's like number 3 or number 4 in ARKK funds. So I'm really interested to learn about whether she buys or whether she sells, because she did sell PALTR, a lot of it, right at the cheapest possible level the stock's seen in almost 2 years. Literally like at $12, $13, she offloaded over close to 4 or 5 million shares. Which obviously from a risk reward standpoint, it doesn't make any sense. And some of the timings of some of her trades have been very, very interesting. It's been very strange, to be honest, because she bought Twitter back in September, October. She went heavy, and then she sold right after the earnings when the stock was down close to 20-25%. It sold off. She sold in the 40s and the 30s for Twitter. So some of the timing of these trades have been very, very questionable. So I'm really interested to learn about whether she buys or whether she sells. So she sold PALTR, double down on her high conviction plays. So that's what I'm saying. So Roku is one of her high conviction plays, right? Because Roku is in the top 4 or top 5 of ARKK funds. So this has to be some of her high conviction picks. So I'm really interested to learn about whether she buys or sells, right? Because PALTR, she had a little bit of PALTR. I think it was 1 or 2%. But Roku is in the 6 to 7% range in the ARK portfolio. So again, curious to learn more about, what she decides to do. That's what I meant, questionable. So some of the timing of our trades have been very questionable. But anyway, JP Morgan reiterates Netflix as overweight. We got RBC downgrades Redfin to sector perform from outperform. Pivotal downgrades Roku to sell from hold. So get ready for a lot of analyst calls on this. Every time a company disappoints on earnings, you get so many analysts downgrading the stock and putting lower price targets that it absolutely has no way to bounce back higher, right? So that's what's going through with Roku right now. So Bogdan, what is your take on PALTR earnings? Did not see your video yet. Really? You guys, I feel like you guys don't watch my videos. What is going on? I get so many questions. I posted a video yesterday on PALTR. We talked about it during our live stream. So we covered the Excel spreadsheet and the earnings twice. There's videos on there, so please make sure that you do check them out. I've shared my thoughts. I've shared everything. What my analysis was. Please do that. I appreciate that. So Telzy reiterates Home Depot as outperform here, and then we got JP Morgan reiterating Apple as overweight as well. Chente says, Brian, watch them. No, not offended. I feel like I get the same questions over and over, and we have covered them, in quite some detail. So, we talked about NVIDIA. I did NVIDIA videos a couple times here. I get it. I'm posting so many videos to try to keep up. I get it. So I'm sorry about that. But we did videos on NVIDIA. I posted a video on Tesla. I posted videos on PALTR. Posted videos on advanced micro devices. So AMD after the earnings. I put a new price target on AMD as well, by the way. And then we also talked about Microsoft. I did a video on Amazon. I did a video on Facebook, a couple videos on Facebook. Then I did a couple videos on PayPal as well. And let's see. And then recently I did a video on Shopify. I think that was the last video. And then I did a video on Upstart as well on the earnings. So those are all at the top of my head. And those are just the ones that I have done analysis on, but then we will be going over more videos here shortly in the future. So I'll probably do videos on Roku. I'll do a look at DraftKings as well, kind of going over my thoughts. So JP Morgan reiterates Apple as overweight. Overweight simply means that they think that Apple's going to outperform the markets. They are overweight. That this stock particularly should be overweight in your portfolio is what they're meaning that they're bullish on the stock in a nutshell. So Daiwa initiates coverage of Block as a buy. By the way, Square reports earnings next week, so I'll probably do a video on them as well ahead of the earnings and probably after once they report. And then Bank of America reiterates Intel as underperformed, so that's the opposite of outperform. So they expect Intel to underperform the markets because the company has a high risk plan with the no reward payoff until 2026. You do more videos than Disney. Bank of America reiterates Walmart as a buy. And then we've got, that's it. That's pretty much wrapping up our pre-market analysis here of upgrades and downgrades. So that's about it. All right, so let's take a look at some of the stocks. By the way, shout out to one of our members who posted a video going over the heat maps that TradingView has. So this is something that we will start using on a more consistent basis. I really like the way TradingView has this set up. Very, very nice way of putting together the S&P 500, and they've got all US companies. They've got the NASDAQ 100, then we've got the Dow Jones, Dow 30 stocks as well. And you can also look at it from a performance standpoint on a weekly, monthly, year-to-date basis. And on top of that, you can also kind of adjust where do you think the heat multiplier should be, along with broken down by sector or not by sector as well. So I really like it. We'll do some more analysis on this, and we'll dive deeper with these heat maps in our future analysis as well. So I really like this all US companies. So I'll do that. So ready for another. This heat map is not on Discord group. I will post a link on there after the live stream. So I'll definitely do that. If somebody can just remind me there, I will definitely put like a link to this heat map that you guys can access, on for yourself, and take a look at some of the companies and broken down by different sectors as well. So definitely, very, very exciting, very, very helpful. Gives us a good bird's eye view picture of how the markets are doing, broken down by different sectors as well. You can also look at different companies in different markets, right? So you can come over here, take a look at all Chinese companies over here and see how they're doing, even year to date. So come over here, take a look at year to date. So electronic and consumer, non-durables, health, everything's just performing really badly. In other words, it is down. Finance sector is also doing really well for Chinese companies. That's pretty much very similar to what the US is, right? So the finance and energy sectors are the two sectors that are doing really well right now. So I will put a link for there. Matthew, don't worry. I will put a link after the live stream for this heat map. I think it's very helpful. But now moving back to stocks here, we got about 15 minutes left for the markets to open. And also I do have plans of actually this weekend probably doing a private live stream with all of our members and putting together like a whole list of stocks and finding intrinsic values and fair values for those companies with you guys. So the plan would be to kind of bring out our Excel spreadsheets and do live research, and there will be very, very engaging live stream because I will be doing polls with you guys for growth rates, for multiples, and for share dilution for a lot of these companies. So the way it would work is that we will do a private live stream with our members, and we will pick a stock. We'll spend 15 minutes analyzing it, and we'll try to get some more information off the internet, of the 10Ks, 10Qs, and then we'll also do polls for what the company's growth rate should look like, how much share dilution, and what type of multiple can be assigned it, and then we can put together a price target or intrinsic value, add it to the list, and keep doing it for like 20, 25 stocks, however much we have that time available, and then make that list available to all the members. So we'll probably do that as well. So private Q&A, yeah, so it'll probably include like a Q&A session towards the end, maybe if we have like 5-10 minutes left. So all right, let's just go over some stocks here. First, let's just go over Roku and let's see what they actually reported, because the stock is really hurting. Can definitely use our attention here for a few minutes. So let's take a look. Right here, so Roku reported Q4 diluted EPS of 17 cents, down from 49 cents same time last year, and analysts were expecting about a 4-cent EPS, so we got a nice beat. So earnings beat. Revenue came in at 865.3 million versus 649 million. from same time last year, and Wall Street was expecting 894. So we got a revenue miss, but an EPS beat, and the company forecast revenue 720 million versus analysts that were expecting 756 million. So that's probably it. We got a revenue miss, we got an EPS beat, but then we also got a future revenue miss as well. So Zan, how can I become a member? So there's going to be a link up there. I've actually pinned it at the very top. So you can actually check it out over there, and we'll probably do the live stream over there. So this right here is going to be the link that you can check it out for yourself if you want to join our Discord. But that's probably it. Roku, we have talked about it. I think it trades at a rich valuation right now. Continues to trade at over 80 times earnings, 9 times sales is actually not bad, but price of free cash flow at over 71, still a little bit rich, and 50 times enterprise value to EBITDA. So definitely, pretty brutal sell-off, but that's the market that we're in, right? That's the market that's been punishing a lot of stocks that don't quite meet analyst expectations here in the short term. So, right now down about 27-30%. Support level that I watched today is going to be roughly in the 98, closer to $100 per share level for Roku. Let's take a look at DraftKings. So DraftKings, I know they actually beat revenue, but I think they missed on earnings. Or no, actually they beat both. They beat revenue and they beat EPS. So they actually reported a negative 35 cents per share. So earlier this was showing me negative 80 cents per share. I don't know what's changed. Yeah, let me see. So, okay, so the actual number is in fact 35 cents per share. Maybe I mistyped it on our market update. I just gotta check here 1 second, because I sent out the morning update in our Discord, and earlier it was showing me it was showing me 80 cents per share, negative 80 cents. I just got to update that very quickly. I'm just going to do it here. DraftKings updated EPS came in at negative 35 cents per share. All right, so that's the number, and that's widening from a loss of 24 cents per share same time last year. So year over year, they kind of widened there. And then analysts were expecting a loss of 63 cents per share, so we got a nice EPS beat. But the revenue for the quarter came in at 473.3 million, up from 322 million, and analysts were expecting 445 million. So we got a nice revenue beat, we got a nice EPS beat, and the company raised its 2022 revenue guidance to a range of 1.85 to $2 billion from the previous outlook of 1.7 to 1.9. Analysts were expecting 1.9. Wow, and the stock is still down. Said it expects adjusted EBITDA loss to be to $825 million, $925 million. It can't be just this. I mean, this is the market we're in, guys. I mean, you just can never tell what's gonna tick Wall Street off. I mean, in DraftKings case, we got a nice revenue beat, we got a nice EPS beat, and we got a stronger future guidance, raising guidance, and the stock is down 16%. So if you take a look at the guidance, let's just take $2 billion. Right now it's trading at $9 billion. We are roughly at about 4.5 times sales, right? 4.5 times sales is where DraftKings is trading at the moment. So I think that's a reasonable price to sales multiple, in my opinion. Absolutely is, but that's also after the sell-off that we've seen for the company. Yeah, I mean, this is crazy. Crazy how just based on an adjusted loss EBITDA, which by the way, the company had no intention of releasing an adjusted EBITDA. They did it for the first time. They introduced this new metric that they're going to guide for EBITDA as well, and the market just sees that and then down 16%. All right, so that's the company that reported. PALTR we've already gone over. If there's any other company in terms of earnings that we can look at, let me know in the comments or in the live chat. So why is DraftKings still making a loss? So basically they're spending a lot on SG&A and R&D, right? That's one of the things that these high growth companies do, is that they're fueling, right, future growth in order to grow revenues tremendously, right? That's what you'll see with Fubo TV. That's what you'll see with DraftKings. You'll see this with a Tattooed Chef. Companies like those that are spending a lot of money, so their operating expenses are pretty high, right? They're very, very high as a percentage of their revenue. So they're burning through a lot of money because they want to continue to kind of bring more people into the ecosystem and increase their revenue, right? And over time, the expectation is that they're going to be spending less dollars for more revenue as operating leverage kicks in, right? As people are already part of the ecosystem, that's going to translate into more revenue, but not as much advertising marketing dollars, and eventually they will become profitable. But right now they're obviously spending a lot of money on those things, and as a result, operating expense is pretty high. All right, so let's see. My $530 Roku puts expires in March are going to print. That's great. Congratulations. Yeah, Roku definitely down 27% is going to be, great for your puts. The market's right now more or less flat here. By the way, we do have a poll going on right now, so make sure that you do vote if you want to be part of that. So I kept it very simple today. So markets today, I kept it red, green, or flat. So far, we got 50% people expecting red, 34% expecting green, and 15%, 16% expecting a flat day for the markets right now. So Coin earnings are also coming up. Yes, so Coin and Square. Those are two companies that I will be analyzing over the weekend. I'll probably do like videos on them ahead of the earnings, and we'll take a look at what we can expect from the companies moving forward. Square, I know it's still going to be trading at a bit of a rich multiple, but we'll continue to kind of analyze that as well. So Matterport, I've actually done analysis on Matterport as well. I've done a complete detailed analysis on the company, so make sure that you do check that out if you haven't already. It's going to be under that playlist, Stock Turn of 30 Minutes. But Matterport, I think they gained over 500,000 subscribers. We covered their earnings yesterday, and right now it's hitting a new unfortunately, a new all-time low and a new 52-week low as well. So it needs to really find a support before we can start to do any type of analysis, right? It's the same thing with Facebook. It's the same thing with PayPal. It's the same thing with a lot of companies that are hitting their new 52-week lows, that we need to kind of let them be, find a support, let the buyers kind of step in, because right now there's this term called no bids going around, because there's absolutely no buyers in the market right now. There's no buyers, and the volumes are low, and whatever volume we can get is all selling pressure in the markets right now. So just gotta let these stocks be. Let them find a support, let the buyers step in, let the prices kind of stabilize, cool off a little bit, and then we can start to kind of develop some more support, resistance levels, some more confidence from a technical standpoint for these companies. Same thing with PALTR as well. So how does a stock even go lower than the IPO price? It's possible. I mean, a lot of stocks go lower than their IPO price all the time. If you take a look at Robinhood, take a look at this. I mean, it IPO'd at well over $33, $34. Look where it is now. I mean, it's at $12 per share. Anything happen in the public markets, right? It doesn't matter wherever you IPO, it can sell off even lower than that, right? That's what the market thinks that it should have been valued at. So whoever bought it at the IPO or even pre-IPO at this valuation, let's just put it this way, right? If you are a pre-IPO investor, if you're a private equity investor, you bought Robinhood here, $32, $33, you thought that was an appropriate valuation. You go public, it spikes, obviously up to $82, $83 per share, but then the market decides, the buyers and the sellers decide where it's appropriately valued at, and right now it's at $12.30. Not saying that it's going to stay here forever. It could certainly go back up to those levels, but this is where the market decides it should be appropriately valued at. So it can certainly go lower, than the IPO price. It doesn't mean if the IPO was at 33, 34, it can go lower than that. That is not the case. It doesn't have to be the floor for the stock. So UiPath is also much lower than its IPO price. I agree. I think Palantir is also approaching its level. One of the things that I do want to clarify is, there's been a lot of talks about share dilution on the company, and I agree there has been share increases in the company's float, but it's not necessarily the company issuing shares directly, right? That's, I think, yesterday's conference call, it got a little bit mixed up because there was a question directly asked from a retail investor, what do you make of the share dilution? Peter Thiel, not Peter Thiel, Alex Karp mentioned that that's a red herring. Obviously we're not diluting shares. It's only $9 million worth of shares that they've issued. That's true. What's happening is the insiders are actually selling the shares, and that's getting added to the public float. And that's what's happened over the last year. It's gone from 900 million to now over 1.9, almost 2 billion shares in the markets for Palantir. So that, whether it's the company's dilution, whether it's insiders selling, it's, as a net result, that's still not beneficial to retail investors, to people who are investing in the company, because that's a lot of supply of shares that is being, getting thrown in the markets as public float. So that obviously is affecting the stock price in general. So that's something that we have to keep in mind, moving forward. We have to kind of monitor on a day-to-day basis or quarter-over-quarter basis for the company. All right, so we got less than 5 minutes left, 3 minutes left for the markets to open. So we're going to switch over to our actual indices here. And then we'll also take a look at some individual companies. It is a long weekend, so there's going to be a lot of things happening with the Russia-Ukraine situation. So we'll probably get a lot of headlines over the weekend about that. And then, you know, of course, the Monday markets are closed. It's a longer weekend as well. And if there's anything that happens, you know, over the long weekend, then obviously the markets are going to price that in first thing Monday night when the futures open. So if you have, again, I mentioned this over any long weekends as well. I mentioned it to our Discord community. If you've got any sort of long positions, if you got any options, that you are holding over the weekend, just be careful because it is a longer weekend, and the volume usually tend to spike the first trading day when it's a shorter week, because Monday is a holiday. So be mindful of that because Monday is not. We're not trading on Monday. All right, so let's see. So red is the verdict for today. We got 50% people expecting the markets to be down, and then 33% people expect the markets to be green today. So obviously the sentiment has been the way it is, and it is still bearish right now. With the yields still under 1.94%, spreads kind of cooling off a little bit. They have, if you go over the weekly chart, we have seen a little bit of a pushback higher on the spreads. And then let's just open up our 4 split screens here. And again, we're keeping a close eye on these charts as well. So if you come over to the QQQs on the 4-hour chart, you'll notice that we're getting a nice bounce back higher from this higher low, right? So that's the ascending support. The most important support level is going to be 335 for the QQQs. And resistance is going to be this lower high. So we still do have some possibility that we end the Friday today on a green note and start pushing higher, possibly back up to this resistance or tag this lower high at 360. But this is a lot of market indecision, but structurally speaking, the trend is still in the favor of the bears as we have consistently been making lower highs. So we have obviously been coming down here, and the pattern itself has been very, very weak. So we are still, making lower highs, and this is also marked as the first lower low. The last time we actually saw that was back in September of 21, and this was the first lower low that we saw in a very long time. So QQQ definitely in a very, very downtrending pattern right now. So would keep a close eye at this support and this resistance right now, and which way do we break out to for the NASDAQ. So yes, I can do a session on options as well. It'll mostly be on cash secured puts and covered calls. We'll probably just do that and do a couple videos on those. All right, so the markets are off here. Let's just quickly switch over to our 5-minute charts. There we go. The NASDAQ is up over 20 basis points. We have the S&P up over 12. The Dow Jones is still down, pulling back a little bit. This is going to be the 4-split screen. So NVIDIA is up close to 1%. We got Facebook up close to 65 basis points. This right here is going to be PALTR up close to 1.7%, just under $12. And PayPal is pretty much flat on the day right now. PayPal hit a low of $104.99 yesterday. So absolutely incredible that this, this stock was north of $300 not too long ago, and now it's trading at just over $100 per share. Brutal market right now. So Netflix getting a push higher here so far. Actually, you know what? Let's just switch over to our heat map. Let's just utilize this, and we'll just do for today, and we'll see how the markets are. So this, all right, this is not 1 hour. Okay, so this should be right. This should be right. Google down about 63 basis points. Let's cover this first. Microsoft down 45 basis points. We got Google down 63 basis points. We got Netflix flat here. For the most part, market's still looking for direction, and right now it's mostly flat with Apple down 17 basis points. Amazon 0.5% here. Tesla is down about 17 basis points as well. And other than that, Rivian, Ford, Activision, Blizzard, a lot of companies is flat here for the most part right now. Or am I looking at it here on the day, right? I should look at it on the day. So Adobe location, I've also got a video done on Adobe. So make sure that you do check that out as well. But I will do like an updated analysis on Adobe. Adobe, I think, reports earnings next week, if I'm not mistaken here. So actually not next week. They're reported in March. So that should be interesting here when they report numbers. It has been coming down. Obviously, it was trading at a very, very high multiple. It has fallen a little bit over 34-35%. So 427 is going to be that next support level to watch for Adobe right now. All right, so how are we doing? NASDAQ flat here, S&P flat, and we got the Dow Jones also flat. I was listening in on CNBC today, and one of the strategists said that institutional investors right now are simply sitting on their hands. They're not doing anything. And they're just waiting for that March meeting and how much rate hike are we going to see, whether it's 25 basis points or 0.5% or more. But the general theme was that institutional right now is not doing anything. They're sitting on their hands. They're not deploying cash like crazy. Of course, if they were, we would have seen it in the markets right now. And most of these rallies are being retail driven, right? So most of the momentum that we're seeing is being driven by retail, and institutionals are just sitting on their hands, not doing anything right now. So that was very, very interesting as well. And maybe we'll do like an update on orders by Fidelity customers. It gives us a good understanding on the sentiment and the order values, and of course the volume behind each stock as well. So we'll probably do that over the weekend. I'll go over that in more detail. So QQQ here, just trading at 345.67. So we're still getting a little bit of a validation here from this higher low. We'll see if we continue to validate that or if we break down here. So am I lagging? All right, just want to make sure that I'm not lagging here. Just let me know in the live chat if I'm still lagging right now. Okay, perfect, good. All right, let's just switch back over to the indices here. Dow down about 20. We got the S&P flat. NASDAQ also pulling back over 7 basis points. The yields are 1.937. Let's take a quick look at our select sector indices chart. And then we'll also look at the VIX. So VIX is now green, up over 20 basis points, back over 28. And of course, 30 is going to be that next level. In the entirety of 2022 so far, for the last 2 months, the VIX has not yet dipped below 16. And the only time it's actually been under 20 was back on February 9th. And the last time we saw that was beginning of January. So it has been a very, very elevated volatility level right now in the markets. So obviously with a lot of uncertainty and, with the economic monetary policy pressures from raising interest rates and inflation going where it is, volatility has stayed high. It has been much, much higher right now. Oil prices are coming down, so that's a big improvement here in commodity prices. Obviously, this is one way to curb inflation because as oil prices go higher, everything starts to go higher in general. And this is the first pullback we're seeing after 8 weeks. 1, 2, 3, 4, 5, 6, 7, 8. After 8 consistent weeks of green for oil prices, this is the first week we're seeing in red, considering that it doesn't rally in the last 7 hours here of the week, considering that today it stays down and doesn't go up, 6.4% or something. So if it stays down, then that would be the first week in 8 weeks that it's down. Bitcoin, wow, Bitcoin's selling off even further, just breached under 40,000. Nobody's talking about Bitcoin right now in the chat. So Bitcoin breaking under 40,000. All right, so it's lagging again. God, I don't know why it's lagging. So Jar says, you all need better internet. He ain't lagging for me at all. Okay, that's good to know. So, okay, should be better now. But anyway, Bitcoin's starting to really break down here. Ethereum is also down about 1.7, testing support at 2,800 right now. And as a result, Mara is down, Coinbase is down, Riot and CleanSpark, and a lot of other crypto-related stocks obviously pulling back. This is going to be a heat map for cryptos as well. So we can take a look at cryptos heat map. So crypto heat map over here. And again, Bitcoin down 1.4, Ethereum is down. A lot of these coins I don't even know. I mostly only know Ethereum and Bitcoin. But other than that, ADA, I've heard of ADA, down pretty much 87 basis points. But Shiba Inu, down about 2.23%, and some of the other coins that I'm not too familiar with are also pretty much more or less flat here or red. Yeah, it could be that it's trying to fill that right shoulder of that analysis. So it should be interesting to see if you do get that bounce back higher or if you do sell off even further below that support. All right, so what is green today? What is green? We got Netflix, Ulta, Analogic, Moderna, Unity Software, Walgreens pushing higher a little bit, AMD slightly green, Google, Apple pushing up more or less flat here. How's the Dow 30 stocks? So Intel, look at that, Intel down over 3% after the downgrade, right? So we got a downgrade for Intel today. So if you come over here, where is that downgrade? Right here. So Bank of America reiterates Intel has underperformed and says no cash generation for 3 years, even with government incentives. We attended Intel Analyst Day in San Francisco, where it laid out an ambitious plan to drive 2 times EPS growth through 2026. So big downgrade here as a result. We're coming down over 3% right now. So, and your target price for Ethereum, I don't have one. I don't have a price target for Bitcoin or Ethereum, unfortunately. So Shopify down to 650. Let's take a quick look. Yeah, Shopify down another 1% here. $600 is that next support right now that we're watching for Shopify. This market is brutal, to be honest. I mean, this is just an insane market where there's no room for error, absolutely zero room for error. These companies need to be picture perfect to the T to go higher. You miss on one thing that Wall Street doesn't like, your stock is getting a million downgrades and absolutely getting destroyed. And imagine how much pressure on these companies' management CEOs might be, like given how the market environment is. Like they just got to come out with some rosy earnings to actually move their prices. Otherwise, it's just losing market caps left and right. Even large caps. Nobody's safe in this environment right now. But yeah, large caps are now mostly done. Next week, we've got some companies like Square, Coinbase still reporting. And I think TrueLeaf is going to be one of them actually reporting as well, but that's a small cap company. Yeah, Facebook got 300 billion, actually, yeah, closer to 250 billion wiped out. So if you take top to bottom now, it's more than $500 billion. At one point, it was a $1 trillion company, and it's now at $565 billion company. So definitely, yeah, it's got a lot of market cap taken off. So Netflix is getting a decent rebound here on the day. I just want to see how this or when this thing starts working properly, because I am on the day, but these quotes don't look right. Facebook is up 24. Amazon is down. Let me just confirm that with what I'm seeing. So PayPal, let's just Google. Let's just see for Google. I just want to double check here. So Google is green by 22 basis points, and this thing is showing me up by 43 basis points. Microsoft 33. Microsoft is down, so I don't know why it's showing me green. I'll figure it out in my free time here to see how this heat map works, because I really need to look at the performance here, but it's not showing me the performance last 1 hour, last 4 hours. But anyway. All right, so Microsoft now 290. It's also got a possible head and shoulders here. So left shoulder, a head and a right shoulder possibly filling in with a neckline at 280. So we'll see if it actually fills in that right shoulder. Nvidia is down over 1.3%, 1.4, down to 241. And right now it's just coming down to that higher low, right? That ascending support that we're now starting to come down to. Nvidia, I've done a complete analysis on it. Fundamental analysis, price target, and where that intrinsic value is for the stock. So make sure that you do check that out. So John Deere, yes, John Deere actually had some good numbers come out. Let's take a look. So we had a beat on earnings at $2.92. That was the EPS, and the revenue came in at well over $8.53 billion. So somebody's asking me, Caddy, when are you coming to Dubai? I'm actually coming there in April. In March, actually towards the end of March and early April. I was very surprised that somebody asked me that question, that because I've been planning a trip to go there very soon. Very, very interesting, very coincidental. But John Deere EPS came in at just under $3 and revenue came in at just over 8.5 billion. So we got a nice revenue and EPS beat. Although resistance, we're now getting tested at that resistance here, roughly $393, $394. So support level is going to stay put at close to 330. I'll actually lower it down to 320 right now. So 320 support, resistance 393, 394 right now for the company. All right, let's take a look at Bitcoin. Somebody says take a look at Bitcoin fast. 39,700 right now. So, wow, it's selling off pretty aggressively at the moment. And as a result, Mara down over 4.6%. We got Riot, we got CleanSpark, Coinbase, everything's starting to sell off here quite a bit. And Ethereum down to testing support at 2,800. Why are you going to Dubai? Just to have a vacation. It's like a mini vacation, right? Go there for like a weekend or something. But that's it. So yeah, for Ethereum, 2,800, that's going to be support. We'll see if he actually does validate that. Or Bitcoin here, 39,700 right now. Big sell-off. So there we go. We're seeing the Nasdaq break down here from this higher low, right? So if you come over to the 4-hour chart, now you'll notice that we're starting to see that breakdown again. The bears have been in control since the beginning of November. So if you come back to this chart, and I can even kind of show you guys if I have the analysis. I don't think I do have the analysis for QQQs. Yeah, I deleted those. Or maybe not. Let me see. Yeah, I deleted that. Yeah, maybe I shouldn't have. But this right here is going to be the QQQ chart. And, you know, I pointed out how we were making higher lows and higher highs consistently. And this right here was the first big sort of lower low that we started forming for the NASDAQ and some lower highs as well. And now we're starting to kind of break even further down. And the next support, the most important support really is at 335 for the QQQs, right? So that's a support from January 24th for this. For SPY, so Walid, yeah, I would love to meet with you if you are in Dubai, if you have time available. When am I coming back to London? Definitely later this year. We'll definitely be there. But the SPY's got a support at 420, right? So we've gotten rejected here at this level at close to $446. So this right here was a level that we were kind of struggling to actually break out of. There's a big sort of supply zone here, 446 all the way up to 458. A couple times we've gotten tagged at that resistance, and the bears are certainly in full control right now, and we're not able to break past that wall. And as a result, we're seeing some more downtrend for the SPY. So the most important support here for the S&P, 420.75 or 420.65 or like around those levels, wherever that green horizontal support is for the SPY right now. So those are going to be the levels from January 24th. By the way, Kathy would also mention that our low has already been hit on January 27th. So that was the bottom of the market, is what she believes, from January 27th. So we'll see what happens there. So Pedro says, all stocks will crash, go away, you losing money, one day up 2%, next day down 5%. Great. I love that comment. So here we go. We got the NASDAQ down 41 basis points, S&P 20, and the Dow is also pulling back here. Fiverr seller earnings, yes, Fiverr had very, very strong numbers, although it still hasn't recovered all the way back. It did have a good day, but we saw a lot of profit taking for the company as well. So yeah, definitely consolidating sideways here. Yeah, Bitcoin definitely not doing too well right now, along with Ethereum. And let's take a look at year to date. So year to date now, energy is up over 18%. 10-year yields up over 19%. Gold has also been doing well, so it's up over 5% year to date. With financials, below this line here, anything that you see underneath sort of here is going to be everything that's in red, right? Everything above that yellow line is going to be green. Everything below this yellow line is going to be red all year to date, right? So right now we've got staples, financials, industrials, utilities, healthcare, tech, Bitcoin. Everything else over here is straight up red, and the only things that are green is gold and silver, pushing up close to 5%. And we got the 10-year yields and energy sector. Energy sector is green. So, all right, is all Realty a decent buy now? Do you think it'll break down below $65? So let's take a look at Realty Income Corp. So Realty Income Corp, $65 is that support. So I like that. So Panda says, Kadiamas calm as a Hindi cow, going to be a green day, trust the panda. Yeah, I mean, I wouldn't be surprised if it is a green day, but there are some levels to still watch. If you do want to see like a trend reversal for the SPY and the QQQs, the resistance levels that we really need to break out of, especially for the SPY, 446 up to 458. That's going to roughly translate over to 4,460, 4460 around those levels. So yeah, 40, 45, 88 is going to be that level, and down to 4,500. So those are going to be the two resistance levels that we really need to see a breakout of for the markets in general. But Realty Income Corp, I will possibly add a roughly $65, $64. I mean, if it does come down to that level, the lower it gets, the dividend yield starts to go higher, right? So you'll notice that it has pulled back 7.6%, and as a result, the dividend yield has gone from 4 to 4.41% because they're paying that same dollar amount every single year. Then you divide that by the actual share price, and you get that dividend yield. So the lower it gets, the better the dividend yield is. And if it comes down to 65, 64, would love to continue to kind of accumulate more shares. I haven't really bought Realty Income Corp in a long time, but I will be doing some purchasing here. So thoughts on 2022 end markets, green or red? That's a great question. Definitely, demands some macro analysis as well. I do think that towards the back half of the year, inflation, when it starts to kind of compete with some tough comps, when it starts to lap over the numbers from July through December, it will start to kind of stabilize. Again, is it going to come down or going to go higher? I can't say with a lot of certainty because obviously nobody knows. We can't guarantee that, but I do think that once it starts to compete with those tough comps, because in December, inflation was at over 7% year over year, right? Before December, November, it was at 6.8, 6.5, 6%. So those are some pretty high numbers. And towards the back half of the year, we'll probably already have a few rate hikes priced in, and already interest rates would have started to go higher. Inflation would be lapping over some tough comps. So I think back half of the year is when we really see a lot of these headwinds kind of clear up. Right now, feels like the markets are kind of battling through a lot of gray clouds, right? A lot of like thunderstorms that are like not really letting the sun shine right now, because we've got the geopolitical tensions, right, from Russia and Ukraine. We got interest rate hikes coming up. Inflation is high. So there's a lot of risks right now for the markets. There's no really real catalyst that's going to drive the markets higher. And obviously, when the companies come in and guide lower, that doesn't help the situation either, because then you've got a big company like Facebook, PayPal dropping 20-25%, Netflix dropping 20%, Shopify. These are big NASDAQ companies, right? These are big corporations that are dropping, and that doesn't help the case for the markets to go higher. So there's a lot of headwinds, and until those headwinds are cleared, I think we will be in this choppy scenario where one day the markets are rallying, another day the markets are down, then the markets like kind of go up back and forth. That's what's going to happen. But right now, obviously bears are in full control, because structurally speaking, we're still in this downtrend. It's only a matter of whether we see new lower lows, whether we breach the levels from January 24th, or if we just keep going back and forth. But once these headwinds start to clear, right, once we start to kind of get a more visibility into the year, once these geopolitical tensions kind of ease out and they're no longer, being talked about every single day, like on CNBC and kind of being driven as the narrative. And of course, once the inflation picture is more visible, how many rate hikes, how much interest rates are going up, those sort of things, then the markets should be doing well because corporate profits are still growing. That's what really grows the market is corporate profits, right? Companies, because S&P 500, what is it? It's the combination of 500 largest companies in the U.S. And if those companies do good earnings in growing in revenue and earnings, the markets in general should be going up, right? The macro factors are just something that affects the markets in the short term. And also, I mean, macro affects more commodity prices, especially when there's geopolitical tensions, right? When there's Russia-Ukraine stuff, it affects commodity prices more than it affects equity markets. But indirectly, when commodity prices do get affected, oil, gold, silver, then we got, palladium, some of those things that those countries export, then as a result, that also affects equity prices because inflation expectations go higher. So Upstart back to 110. We'll see. How is it? So it's pretty much flat here right now, but Intel really getting a lot of action right now. So wow, look at Intel, down over 4.6%. This has been the overall trend for Intel. Is it really on? Intel got smoked after their CEO saying that their margins aren't going to improve till a few years later. Yeah, so this obviously is taking a big impact on this downgrade, right? Bank of America coming out and saying that it's a high-risk plan with a no-reward payoff until 2026. So that's, that's obviously putting a little bit of pressure on the company right now. But it's definitely coming down to this sort of green rectangle, right? The support at roughly in the $40 to $45 range. It has validated that support time and time again. This is coming from January of 2018. So, we validated over here. We validated support a couple times here, validated support here. And right now we're just coming down to that level once again for the 5th or the 6th time in the last 4 years for Intel. Provided it hasn't really done anything in the last 4 years. And to be honest, like if you go back to the dot-com bubble, it still is not breaching those highs. I mean, think about that, right? That's been over 20 years, 22 years for the markets. And Intel's high back then was at $76 per share. So obviously, I mean, pretty significant trend here for Intel overall. Look at this rally ahead of the dot-com bubble for Intel, right? Coming in from like 1973, it saw a rally of close to over, oh my God, is that real? Is that number right? 234,000% return. What? That's probably because it's coming in from like a very, very low number, like 3 cents. 3 cents back in 1975. What? That is insane. Going up to like leading up to the dot-com bubble. So in that 25 years, 220,000% return. And then obviously the stock, dropped over 80%. 80%, literally 80%. So had you not been in Intel throughout this time since 1996, you pretty much lost all of it. And then of course, it's been on this slow and steady recovery. Really hit that bottom back in 2008 during the Great Recession, and then has been rallying over 473% during this entire bull market, but now it's just consolidating sideways because the revenues have really stagnated, and obviously AMD, Nvidia are really eating their lunch right now for Intel. So they're not really able to like grow the revenues or the margins or anything like that. So it is a good value play. It is definitely a very, very strong value play. So if you consider that, so 2021 EPS was, let's see. So earnings per share came in at $4.86 for the company. So if we put it into like a very, very simple intrinsic model, so 486, what do you think the growth rate will be for Intel earnings for the next 5 years? I want to take a poll from you guys. What do you think Intel is going to grow in terms of earnings, EPS, for the next 5 years? And considering that EPS declined 1.65%, this year compared to last year. So keeping that in mind, and keeping in mind that they are going to be spending a lot of money, with with this manufacturing division spending over $10 billion in Ohio, building their factory. So a lot of things they're going to be spending money on. So we have to be very, very conservative. What number do you guys think is going to be appropriate for Intel to kind of grow their earnings by? And I'll take a look at Seeking Alpha as well to see what they have for analyst estimates. So analyst estimates, growth projections, EPS 5-year CAGR is 4%. That's what they have, right? So EPS forward long-term growth 3 to 5-year CAGR, 4% is what they have. So I'm getting 1%, I'm getting 0.5 to negative 0.5%, I'm getting 0.5%, Martin says 3%. So let me know what you guys think. I want more engagement. I want to have all the 500 people that are watching give me a number. What you guys think their growth is going to be over the next 5 years for earnings. And then let's just quickly take a look at the valuation as well. And the PE ratio, 12 has been the average for Intel over the last 5 years. So like he says, 1 to 2%, 3%. Let's just go with 2%. I think 2% is reasonable for the company, right? For 2% earnings growth, they're going to go from $4.86 all the way till $5.37 by year 2026. So I'm going with, again, 2% CAGR. PE multiple, that's another, sort of multiple that we have to really understand from Intel's standpoint. And in the past, if you look at the numbers that we just looked at, it's traded at 12 times average, right? 12 times earnings has been the 5-year average for Intel. And right now it's trading at 13.66, on a non-GAAP basis, 16.31 on a GAAP basis as well. So I'm taking 2% earnings growth. I want a PE multiple. What do you guys think for the PE multiple is going to be appropriate for Intel? If we do 14, right here, 14, and we do like a 12% discount rate, then we get like a fair value of $38. $30 is what we get for the company. PE 14, so I agree, 14 PE I think is very reasonable. We get a fair value of $38. $30.36. This is after our margin of safety, right? So if you do zero margin of safety, we should be comfortable buying this stock at 42. But if you do like a 10% margin of safety, $30 is the fair value right now for the stock. And where is it trading? It's trading at $45. So not too far off from its intrinsic value based on a 2% EPS growth. Now, again, that's the real if. Is the company going to be able to grow by 2% or not? Let's just see what happens if you do like 5% or 4%. If you do 4%, $42 is the fair value, intrinsic value based on a 12% discount rate. So again, we will get an annualized rate of return of over 14%, and the price target would then be $82 5 years from now for the company. But the real question really then becomes, the margins are not going to be growing. Free cash flow, significant free cash flow is going to be going towards all this expenditure, and how the business kind of shifts and kind of becomes more into manufacturing, right? So, all right, so P14, we got 14, 12, 10, 12, 10. You guys can kind of play around with that calculator for yourself and see, what that intrinsic value is. So yes, the discount rate is the desired annual rate of return is what we want. So we want anything that's over 10%, right? Because we can get the 10%, 9% from an S&P 500. So if you want something that's higher, that's why you're looking at individual stocks. Then you go with like 12%, 14%. That's just an EPS fair value calculator. You can also look at the free cash flow, like a discounted cash flows. And then in that, the discount rate is mostly the weighted average cost of capital for the company. It's not always 12% or 14%. Sometimes it'll be 10%. Sometimes it'll be lower than 10%. It really depends on the company itself, what their weighted average cost of capital is. But for a very simple EPS calculator that I also made available to all of our members here, so this is available to you guys, this Excel spreadsheet, if you want to take advantage of that and kind of play around with these different companies and look at their fair values and where you're comfortable buying them, you can do that. So all right, let's take a look at the markets here. We're getting a little bit of a recovery here. NASDAQ is flat, and we got the SPY here, S&P down up just over 22 basis points, and then we got the Dow Jones up over 14 basis points. Bitcoin is getting bought up here, so very nicely, it's back over $40,000. Bitcoin is alive. Yes, Bitcoin, Mara, Riot, Coinbase. There are still some buyers present. And then we got Ethereum only down about 1%. Seems like getting validated at that support at 2,800 right now. So we pinpointed that support down to 2,800. Look at that. The low for the day. The low for the day is $2,800. It is to the point, to the decimal right now for Ethereum. So people are watching this level very closely for Ethereum right now. So yeah, we're getting some buyers kind of stepping in. And we'll see how the markets kind of end up on the day. But yes, Intel also has a 3% dividend, so don't forget that. That is not included in that EPS calculation. That's a great point. I appreciate that you bringing that up. Intel's also got a nice dividend yield, so your total return should be much higher, right? 3%, analyzed every single year, roughly is going to be 15% is what you can add on to this total return once you receive those dividends as well. So I think that's a great point. Yes, Upstart, I covered those earnings. I went over that stock not too long ago. So you're more than welcome to check that out as well. All right, guys. So I'm probably going to call it there. Thank you so much for joining for the live stream. I really appreciate it. We'll take a quick look at the heat maps if that has actually been working for us. I don't think so. I don't think why this is not working right now. It's not showing me the live quotes at the moment. But anyway, thank you so much, you guys, for tuning in. I really appreciate it. And make sure that you drop a like. And of course, subscribe if you're new to the channel. We talk a lot about fundamental analysis, technicals, and macroeconomics as well. Make sure that you do check out the link down in the description below for our Patreon. It's also pinned comment in the live chat. If you want to join our Discord, get the buy and sell alerts, get our market updates, and more importantly, get private videos, tutorials that I share with all of our members, including spreadsheets that's available for you to download, Excel spreadsheets, PDF downloads, and a lot of other sort of like research items, documents that you will be able to download as well. So thank you so much for being here. I really appreciate it. Hope you guys have a fantastic long weekend. Remember, Monday the markets are going to be closed. So hope you guys have a great weekend. And I will see you guys Tuesday morning live. And over the weekend, I will be posting videos like a madman as I always do. So thank you so much for being here. As always, happy investing, and I'll see you.